So one of my YouTube subscribers asked a question regarding the Mark Minervini 1 month trend template and 5 month trend template. So let me explain to you uh, what that question is, why he's asking that question. So if you go to MarketSmith, I will click on breakouts. That's my filter. See on the left side, there is MarketSmith stock screens. When you click here, come down. There are two filters here. He wanted to know what is the difference and can he use it. Okay. So when I click here, Mark Minervini trend template 1, look what happens. See, this window pops up. It says the list screens for stocks with moving averages in an uptrend based on Minervini trend template criteria. What is Minervini trend template criteria? Well, it's very simple. The price has to be above the 50-day, the 150-day, and the 200-day. And the 50-day has to be above the 150, and the 150 has to be above the 200-day simple moving averages. That's the moving average criteria. Another criteria is the relative strength of the stock should at least be 70 or more. Okay. And the remaining two criteria are the 52-week high and 52-week low. The price should not be lower than more than 25% from the 52-week high, and the price should be at least above 52-week low by 25%, minimum 25% above the 52-week low. That, in short, is basically the Minervini trend template criteria. So it includes relative strength, it includes criteria for 52-week high and low, and it includes the moving averages. So it's a very simple technical filter. It does not contain the fundamentals, and the filter is kept very broad. Now, in this case, the Minervini trend template 1 month, the specific criteria is the 1 month version requires the 200-day moving average, that means the red line, to be trending up or sloping up for at least 1 month. Okay, so minimum 1 month has to pass where the red line is sloping up. And for 5 months, see, the 5 month version requires the 200-day moving average to be trending up for 5 months. So the difference between the 1 month and the 5 month is in the 1 month, it is possible to catch a stock early in its trend. 5 months is a very long period of time where the 200-day moving average has been trending up for at least 5 months. So it is a well established, mature trend. Okay, so it's an uptrending stock since past 5 months based on the 200-day simple moving average. So the five month filter, the stocks that you get in 5 month filter, we could say that they are relatively less riskier because they are well established mature trends compared to the stocks appearing in the 1 month trend template filter. Okay, so this filter has got 55 stocks, and this filter has got 15 stocks. But now what I will do is, this is based on current market conditions. Okay, now what I will do is we will create a Mark Minervini filter. Okay, let's go here. Let's create a filter. Okay, let's call it Mark Minervini. Mark Minervini filter. So market Smith rating, this has to be more than or equal to 70. So 70. And then this is the only criteria he uses for market Smith ratings. Technical filters, where is the 52-week high? Yes, this is the 52-week high. Greater than or equal to minus 25. So from 52-week high, it should not be more than 25% below. And 52-week low, this should be greater than or equal to 25. So from 52-week low, it should be up at least 25%. So we are not picking the bottom. We are getting into stocks that have already recovered 25% or more from the 52-week low. Okay. So minus 25 plus 25. And then price versus 50-day. The price is above the 50-day, price is above the 200-day. That's it. This is all that is needed. No fundamental filters required. no pattern recognition filter, no market index filter. So this is a very broad filter, no liquidity filters. Okay, we'll save this, and now let's see what comes. Let's see how many stocks show up in this filter. So see, 229 stocks show up in this filter. Now, what is the difference? Why is this difference occurring? Why is there a huge difference coming between this and what we saw here? Well, this is filtering based on the Mark Minervini trend template criteria, some points. So basically, the 70 relative strength, the 52-week high, 52-week low. Then we put two filters for moving averages, right? See, price should be above 50-day, price should be above 200-day. These are the two filters we put. But this does not guarantee that the 50-day moving average is above the 200-day moving average. That is why you are getting the uh, list. That is why you are getting a list that is longer. Okay. So in this case, we don't have a filter in MarketSmith India. We don't have a filter which says the price should be above the 50-day. The 50-day should be above the 150-day, and the 150-day should be above the 200-day. That filter we don't have in MarketSmith India website. We have that filter in Market Surge application in the US. In the US, there is a moving average filter. The 50-day should be above the 150, 150 should be above the 200. Okay. And then if I put the price as above 150, a combination of those two filters gives me the proper trend template criteria. Here, what I'm mentioning is that the price should be above the 50 and the 200. But what if sometimes the price is above the 50 and the 200, but sometimes the 50 has gone below the 200? Is that possible? Yes, it is possible, right? So that does not come in trend template criteria, correct? That is the reason why we are getting a long list of stocks here. You can actually go and check the charts to understand this thing better, what I have explained. I cannot open the charts because as per the regulations in India, I am not allowed to show you stocks with latest 3 months data or discuss them. I am just showing you the filters here. The stocks that come up in this filter is the starting point for your analysis. That is where you should focus your research on. Okay. Thank you so much.